All right. Good evening and welcome back to the Technical Analysis Basic series, where we are going to discuss the fourth story of Fibonacci ratios. And once again, a warm welcome on behalf of GTCFX. And this is your host, Harsh. We've got a few participants today, only two of them. So, Amel and Sally, thank you again for joining. And if you do have any questions on the past sessions that we have taken, please let me know or we can get started straight away. I think I think we are fine. Just to recap on what we have done till now, it was the first one was the candlesticks chart patterns. Second one was the support and resistance, and the third one, that is the last Tuesday session, was for the trends and trend lines, where we studied A, B, C, D, and the six specific steps to trade, where the entry has to be done or made at point C, stop below A or above A, and the target goes towards D. All right. Good afternoon, Sally. Okay, so let's get started off. So we've got Muhammad joining with us again, and thank you, Muhammad, for joining. Let's get started. A general warning in the beginning, before we start the theory. So what we are going to do here is we're going to study Fibonacci ratios. It's a very simple subject. It's a very simple topic. And then we are going to see implementation. Okay, Ravi is also joined. We're going to see the implementation, a practical implementation on the charts. All right. Now, if I directly take you guys on the Fibonacci ratios, or how to implement, it's going to take only 10 minutes or maximum 15 minutes. But we are going to study, or we are going to discuss a bit of history, a bit of the significance of the ratios and why they are used, and why they are so important, and what is the wave structure called, like what is a retracement, what is an extension, and what is the significance, and how to remember them. All right, so let's get started. If you were there with me in the last story, okay, the general risk disclaimer first. As we all know, anything and everything that we are going to discuss from this point onwards should be construed only as educational purposes. We are not here to give any kind of personal trading advice or encouragement to trade, and have no specific interest in any of the instruments that are discussed or that would be discussed in the practical sessions as well. Trading CFDs carries a lot of risk at a personal level. I would like to tell you, you should be looking absolutely with your risk management before taking to decide or deciding to trade. All right, thank you. All right. So the first story was the sign language, where we studied six chart patterns, three signals to buy, three to sell. The second story was we understood the process of creation of support and resistance, and then breaking of support and resistance. Okay. And the third story, most important, we understood how the markets move. That is, we understood how the waves are formed, where to enter, where to stop, and where to target. Now, entry and stop loss we discussed in the last story. The what was left was D part, correct? If you remember, we all we all know now what is the importance of C and how to find it, and then we all know where to put your stop loss. All right. For those who are joining in, tuning in now, a warm welcome again on behalf of GTCFX. Please mark these sessions. We are going to This journey is going to continue for another 6 weeks, every Tuesday, 4 p.m. Dubai time. Believe it or not, by the end of the 10th story, we will be good at even the basics. We will cover the basics, and we'll also be doing Elliott wave principle, the basic structure, and the pattern of the motives and corrective waves. So these theory sessions will be very important. And also, let me kindly remind you that we are doing 4 webinars every week, two in Hindi and two in English. And one is theory, the second one is live analysis session. So Tuesday and Friday are the English theory and live analysis session, and Wednesday, Thursday are the Hindi live analysis sessions and theory. You might want to keep note of that, and at the end of the session, I'm going to also paste the links to register for all, and kindly help spreading the word as well. Thank you very much. Let's get started. These are your sessions again. Do not hesitate, please, to stop me where you need to, and let's discuss and let's find out what's the better way to learn. All right. Thank you so much. Okay. So this story is for D, that is specific entry for C and specific exit for the D. That's the target. Okay. Now, before we go to the practical implementation of Fibonacci ratios, let's at least understand it's just a light subject. All of us have heard about the Fibonacci sequence. We have all studied the Fibonacci sequence when we were all in school. And if you did statistics or probability studies, you must be a master of that because it cannot happen without the Fibonacci ratios or sequence. So Leonardo Fibonacci, a mathematician from Pisa, actually came up with a natural series, and that series was termed as a Fibonacci sequence. Uh, that series he came up after studying nature. Please, I repeat, after studying the nature, a specific natural cycle on plants, on animals, and other objects like ocean or mountains. So anything natural can you, if you can imagine, those are the studies that he made, and he concluded with the following sequence. Now, this sequence goes as follows. It starts with 1, okay, and the first one is 1, and then the second one is another 1 because there is no previous number, and the third one is derived by adding the current number and the previous number. So if I'm standing here, I'm the current number. I add the previous number to get the next number. So 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3, 8. 8 plus 5, 13. 13 plus 8, 21. 21 plus 13, 34. 55, 89, and so on. We have not done Elliott wave analysis in the English sessions, but if you are also attending the Hindi ones, then we just completed the first story in basics of the Elliott wave principle. And if you remember, these ratios were there in the Elliott wave theory as well. There are 2 waves, or 5 waves, or 8 waves, or 13 waves, and 34, and 55, and 89, and we went up to 144 in one particular wave. So that theory is also based on the Fibonacci sequence. All right, it's popularly known as the Fibonacci sequence. Let's go further. The natural things which our friend Leonardo Fibonacci studied was breeding cycle of rabbits. Now, none of this, these are my inventions. I'm just sharing information, okay? This is not knowledge. This is just information. You can go and Google Fibonacci sequence and you'll get n number of examples. I've just stated 3 of them. Now, breeding cycle of rabbits goes like this. You take a pair of rabbit Allow them to breed. At the end of the breeding season, you get two pairs of rabbits. Allow them to breed. You'll not get four, you'll get three pairs of rabbits, and then five pairs, and then eight, and then 13, and then 21. All right. At this point in time, you have to have faith in my words. But if you go and Google, you'll find it scientific proof as well. Shrubs that are small, they are not trees, but they grow very small, called as shrubs. Their stems are sprouted in the Fibonacci sequence 1, 2, 3, 5, 8, 13, 21, and so on. I'm sure every one of us in this room right now must have seen piano, either as a player or as an audience. And but I'm not sure if you have seen it close enough to find out that there are two key sets of the piano. There are two key sets, the upper one and the lower one. Upper one is the black keys and the lower one are the white keys. Now, one black key is supported by two base white keys. Two black keys are supported by three white keys, and three black keys are supported by five base white keys. 1 to the base 2 to the base 3 to the base 5. This is called an octave of a piano. Smaller one is an octave, and the larger pianos are consisting of two or three octaves. I am not a piano expert, but this is what I've read and actually saw that 1 to the base, 2 to the base, 3 to the base 5 is actually working. We still have, and I love telling this to you. If you have heard a pianist playing, there are certain sounds that if you play them well, and if you play in a combination of keys, they are very soothing to the ears. Believe it or not, they are also due to Fibonacci ratios. The frequency of those keys, when you divide the frequency of those combination of keys, it comes to a Fibonacci powerful ratio, which is called 0.618. It's also called phi. We'll bring up that ratio just in a few more slides. But why I'm sharing this with you is it's amazingly powerful science. We are living with it every single day. In fact, we are breathing with it every single day, but we don't know that. Okay. So this is this brief history of Fibonacci, studying nature, and then those had to be converted into ratios because we are going to use these ratios in our trading, in our analysis, in our entry, in our exit. These ratios are going to give us specific, okay, this is the price you need to enter. All right, that is the price you need to exit. Okay. So how are these ratios derived? No one is going to ask us. We don't need to remember how these ratios came in. Okay. I'm just sharing with, just for the sake of sharing. That's so we don't need to remember. Even I don't remember the math behind it. Let's say we take a pair 34 plus 15 equal to 89. And we do some mathematics on this. 34 divided by 89, we get 0.382. 89 divided by 34, we get 2.618. 55 divided by 89. 89 divided by 54. And then we take square roots of a couple of them, that is 0.618 and 1.27. And that's how we get all these 1, 2, 3, 4, 5, 6 ratios. Now, believe it or not, it is not only for 35 plus 55 equal to 89. You can pick up any pair that you want. You can do this exercise if you want. 55 plus 89 equal to 144. You pick up that series. Do the same math. Every time you will end up around these ratios. What it means is there is a specific mathematical pattern in which everything in nature moves, and it's applicable exactly the same manner on the charts as well. All right. If it's applicable on nature, like oceans, like mountains, like Saturn, the 6 rings of Saturn, they are distributed in these ratios. The 6 rings of Saturn are distributed in these ratios. Okay, who is the most complex creation of God? Or what is the most complex creation of God? Humans, right? We are the most complex creation of God. If you agree to it,
Man,
huh?
human being.
Yeah, human beings, we are the most complex creation of God, and these Fibonacci ratios are working on our bodies as well. I mean, it's an amazing story, but I just quickly tell you, if you can measure the distance between the tip of your head and your Adam's apple, the throat, which is also called as Vishuddha chakra in Sanskrit, if you can measure the distance and and let it be x, if you multiply x with 1.618, you will get the distance from your throat or Vishuddha chakra to your navel. Add x and y, and again multiply it by 1.618, you would get the distance between the navel and your toe. And then you add all the three and you get your height. So what you need is the basic x. So what you need is a basic AB boundary coming to the markets. What we need is a basic AB boundary. And if you have the basic AB boundary, with the help of these ratios, we can find out C and we can find out D. C is the entry point and D is our exit point. Okay. All right. Let's now understand how exactly uh, the Fibonacci swings are applied. Okay, this is just a theory. I'm going to take you on the practicals anyways. So let's leave that screen, but this is important, sir. So let's sit tight and enjoy and try and understand what this page is saying. This page is telling us a beautiful story of an ABCD, which we all know, and we've defined it as an upswing, then pullback, and the second upswing in the earlier sessions. We're just renaming them as follows. Upswing is the AB boundary, and when the market is traveling from B to C, we call it as a retracement, and the travel between C to D is the extension. Now, why the word retracement is again a beautiful story. It's not a story, but I like creating ones. Okay, so it's called a retracement. Why is it called a retracement? So there is a trace. What is our trace, sir? Our trace is AB boundary. Trace means path. All right. Now the markets are very smart. They don't go blindly in one way without checking whether they are correct or not. So they retrace. After creating the trace, which is AB, they retrace to a BC. All right. And that's why the name retracement. They come back and try and find out if I'm on the right track or not. The retracement, listen carefully, please. The retracement of AB boundary produces C for us, which is our entry point, and extension of the same AB boundary produces D, which is our target point. I repeat, sir, please listen carefully, because then I will humbly ask you a question. The retracement of AB boundary is going to produce C, and the extension of the same AB boundary is going to produce D. C is our entry point, D is our extension or the target. Now, please let me know if you have understood this correctly. The, the moment we have AB boundary in our hands, can we plot both C and D when the market is right at the B point? The question is, the moment we have our AB boundary on hand, is it possible to find out C and also project D at the same time, and the market is still at point B? So we need some input from your side. Is it very confusing? Let's say the AB boundary is A is 0 and B is 100. I've told the definition. The retracement of AB boundary is going to produce C, and the extension of AB boundary is going to produce D. The answer is, the moment you have AB boundary, we can plot both retracements and extension. Yes. So Amen has told that yes, the moment we have the AB boundary, we can find out potential entry point C. Please stay in the room. At the end of the session, we are going to go on the real practical chart, and we are going to do this exercise. All right. So it's going to be exactly what we are doing right now over here. The moment we have the AB boundary, we can very well project the potential, find out potential C and potential D. Believe it or not, we will have to wait for C. We will have to wait for the market to produce C. But before even our C is in our hands, we will have the targets. We will already know that this instrument is heading north up to that price or south up to that price. And I'm sure this would have come by surprise. So, how to do that, sir? When you have the AB boundary, please remember these two things. I'm giving you a shortcut to remember. For entry, we need retracements of AB. That means our entry point is C, correct? So for C, we need to find out retracement of the AB boundary. And the four levels of retracements, the shortcut to remember are 3, 5, 6, and 7. I repeat, 3, 5, 6, and 7. It stands for 38%, 50%, 0.618, and 0.786. All right. Now, believe it or not, if this market is in an uptrend and if it wants to continue rising, then it will bounce from any one of these levels. It will produce something. It will produce what? It will produce a morning star or a tweezer bottom or an engulfing bullish from any one of these ratios. And then we got to execute. Okay? 3, 5, 6, 7 are the levels of retracements. To find out C, we got to find out retracements, and these are the retracement levels. Next, to find out D, that means extensions. We got to go to the extension of AB to get the targets. And the two ratios of extensions are 1.27 and 1.618. Okay. Is it easy to remember? I'm going to show it on practicals as well. It's very easy. Just you need to click two mouse buttons and there you are, bang your entries and bang your targets. It is so simple. The only difficult part is finding the right AB boundary. And the second most difficult part is waiting patiently for the C to appear. That is where the most difficulty comes in. We lose patience, we enter at B, and when the market is retracing, we panic and we exit at C, and that's the point where the market is going to turn around and it goes again to the same direction where we had entered. All right, so this is the basic problem, and we'll try to address that at the end of the session. Believe it or not, AB boundary is our king. If you got the AB boundary, that means you are 85% there, ready for the trade. And I'm not joking, sir. This is a fact. We've done this for 9 consecutive years before starting Elliott waves. Right now, I'm practicing Elliott waves mostly, but for 9 years between 2008 and
ഇതിനെ കൊടുത്തിട്ട്
2016.
പേയ്മെന്റ് ചെയ്തിട്ടില്ലെങ്കിൽ അവിടെ മിസ്പ്ലേസ് ആവും ചിലപ്പം അവിടെ കുറേ ആൾക്കാരുണ്ട് ബില്ല് വെക്കുന്ന എടുക്കുന്നതിന്റെ സമയത്ത് എടുത്ത് കൊടുത്താൽ മതി.
Sorry, are you asking something or you?
No, I'm sorry. I didn't know that phone was on mute.
Sorry?
No, I was talking to somebody else. Sorry, I'm sorry.
Okay,
I
okay.
didn't put the phone.
I thought you were talking to us. So no problems.
No. I got a call and I was sorry.
Okay, no problems. Okay, so let's continue. So what we were discussing is the AB boundary is our king, and once we find the AB boundary, we are 85% there. So that applies to the downswing as well, or a down trade cycle as well. The first one is the first swing is downswing. Again, the pullback is called retracement. Now we all know why it is called a retracement, and for D, it is called an extension from C to D. All right. Again, for finding C, that is, we got to find out retracements of AB boundary. The ratios of retracements are 3, 5, 6, and 7. So 38.2%, 50%, 0.618, and 0.786. If the market wants to continue lower, it will bounce or it will turn from any one of these ratios. And to find out D, we find out extensions of the AB boundary, and the ratios are 1.27 and 1.618. All right. Okay. So the strategy for downturn is sell at C or a retracement and stop above A that we have discussed and close at the Fibonacci extension 1.618. Now let's get down to the practical implementation. This is where the story becomes so much fun. And believe it or not, time and again, over and over and over again, we've been playing these stories, and I'm going to take you on a rising market first. We are going to take a historic price action which is already achieved, and then we are going to take the current price action and we are going to project it. Okay, so when we do historic, you will see, okay, that this technique is working, and when we do the projection, you would see later on whether this is working or not. All right, so I'm going to plot the first AB boundary. After that was a down, that was a falling market, everyone would agree, correct? This is your A, B, C, D. I believe we are all together. And now, are you all able to see the charts, by the way? The charts are clear? Maybe you can just confirm by one OK message and it will be good. All right. A, B. The first resistance was out here. All right. Yes, it is clear. Okay. Thank you, Amel. So we've got the first AB boundary. Now we want to project the C, and then we want to project the D. Okay. So let's do that. When you want, please now please pay attention. I'm taking the Fibonacci retracements for C and the extensions for D. And if you are not practicing, or if you don't know this platform is TradingView. You can open a free account on tradingview.com. It's one of the world's best platform that is used by billions of traders for analysis, and then you can execute on MT4. All right. So for retracement, this is the tool. On the left hand side, you can see Fibonacci retracements here. Okay, click that Fibonacci retracement. Move your mouse from A to B. So you've got to click A and hold, and then drag your mouse towards B and then release. Give a second click there. Okay, First click is A, second click is B. The moment you do so, you will. Do you see lines over here? I have plotted 5 lines. You can choose to plot 5 if you want. 88% also I have taken for some exclusive cases, but you just need to inculcate 3, 5, 6, and 7. All of you are able to see this. Please select these 4 ratios, choose whatever color you want, whichever color you want, and you're good to go. So now on the right hand side, what you are seeing, let me see if I can enlarge it a bit. That is your AB boundary, and here's your projection of C. So once you project your C, you should be able to project your D as well. Right now the market is here, and let's project the D as well. For D, you need to take Fibonacci or trend-based Fibonacci extension, sir. You need to take trend-based Fibonacci extension. All right. The first click is A, second click is B, and third click, if you are using TradingView, again B. So for extension, you need to give 3 clicks, first at A and 2 more at B for the standard extension. For Elliott wave method, we will change a bit when we discuss Elliott wave theory, all right? But there is no significant change in the targets. Now for targets, we have discussed to take 1.27 and 1.618 as the theory. Practically, I would suggest you select 38.382 and 0.618 as well, because those will be the first cycle, and then it will go to the second cycle or the second target. All right, so again take 4 ratios: 3.3.8 382, 0.382, 0.618, 1.27 and 1.618. All right. Okay, so our projected entry point is any one of these 4 ratios. Market should bounce. You see market dropped to 0.51.8, 0.50%, and it produced, this is a bar chart, so I need to change it to candlesticks for your signal sake. And let me just zoom. Now this was the sideways action. We will discuss sideways in the next theory sessions. And that is a morning star. Did you see final morning star here? All of you are able to identify a signal over here. Invariably, everywhere the signal is there. This is an entire engulfing bullish, but that's a sideways pattern. So I'm picking up the last one before the breakout. It's a morning star over here, bouncing from the 50% retracement, and finally it went up to the targets until 550, which was, you see, the first cycle was met 420 and 460. It extended through 550, 560. All right, so that's a historic wave where we use the Fibonacci retracement to enter and extension to exit. Now I hope you've realized that our C will come later on. We will have to wait for the production of C, but the D will come beforehand. All right. Okay, now when you're done A, B, C, D, can you see there are small ABCDs in between? There's A, B, C, D, and then there's A, B, C, D. Let me plot here. Please, if you're not able to see clearly, let me know. I need to zoom. Okay. All right. There is a small ABCD in between as well. So now we've got a new A and then a new B. All right. And then again, you will draw the trend lines, etc., etc. But last session, did I tell you another story? that when you have multiple ABCD boundaries, what you got to do is combine them as one AB boundary. I'm sure I told you this while discussing trends, correct? So now let's forecast the future. This is a Euro USD chart. The next trade is for us to execute if you are trading already, and if you are not trading, because I don't advise you to trade right now and the theory classes are on, please note down the trade signal. Okay, please note down the trade signal. Now that is our capital A or capital B. Again, what we have in hand is the AB boundary, correct? Yes or no, sir? Once you have your AB boundary, what can we do? Immediately you can find out retracement and you can find out entry, which is our C point, and at the same time we can find out the extension of the targets. So for retracements, again, first click A, second click B, release. For targets, take Fibonacci extension, first click A, second click B, third click B. Clear? All right. All of you can see here, do we have our C in place or not? Do we have a potential C in place or not? This is the fourth ratio. Just below that, a morning star has appeared and the market has started to move on the other side. I don't know if you have practiced enough on the trend or not, but if you practice enough, I'm going to show you one more super thing which we discuss in the theory of trends. Did we discuss intermediate trend lines, sir? We discussed the intermediate trend line, correct? That is your intermediate trend line. What do you see now? Do we have a potential C formed over here? Can I plot C question mark right there? Yes, sir, we can plot C over here because it is at the 78% retracement of the AB boundary. It is also at the back side of the trend line, which penetrated a bit. Now this penetration was a bit more. Normally it would have bounced from 61.8%. Now it has bounced from 78.78%. And this was happened. I got a question from one of my participants in Hindi classes. Why this happened, sir? Now, over the weekend, Mr. Trump, President Trump, gave some fundamental statements of, and he has begun a tariff war or trade war to Canada and China and maybe other countries, that we are going to impose tariffs on you. And that boosted the dollar, but that boost was not enough to change the trend. You see, that price did not go below A. Remember the theory of the trend, right? C cannot go below A. So C did not go below A, and we were waiting for this signal to appear. On a 4-hour chart, we had a beautiful morning star. On an hourly chart, also we had a morning star. And now our potential C is in place. There is a potential target, sir. Okay, so I'm going to print something over here. Buy right now. If you want to buy, you have to buy at the current price. So what is the current price? 1.0326. Actually, we bought around 1.0260 Monday morning. First session Monday morning price was around 1.0260. Stop below A. So A is 1.0175. I will say stop at 1.0150. So we are below A, and the target is being provided by the Fibonacci extension, sir. Please note down these two targets. Please note this trade for our sake. It is betterment for our sake. Please note this trade. Euro USD entry current price 1.0326, stop loss 1.0150, and target 1.0670, 1.0750, 1.0980, and 1.11. So we have got two cycles projected over here. So ideally the market would go like that and then come back and then achieve the next target. Now this is not going to come in 2 days or 1 week or 2 weeks. It may take several weeks for prices to reach 1.12. In fact, I would go with the ideal or the standard target of the first cycle 1.0670 and 1.0775 or 0750. All right, sir. That is the Euro USD trade setup. So we have just applied what? ABCD, that is trends, trend lines, Fibonacci ratios, candlestick patterns, and boom, the target. So we have applied all the four stories that we have discussed until now. Sign language, that is the candlestick pattern, we have got a morning star. Support resistance, okay. Support resistance, how we have discussed or how we have implemented. The first resistance was broke here. The story of support and resistance. The first resistance broke here. This was the break. Market went up. So who scored a point over here? Who scored a point over here? Bulls, correct? So first point scored by the bulls. What happens after the point is scored? Yes. What happens after the point is scored? Amel, you've been catching up pretty well, I think. It looks good. I hope everyone are on the same page, please, even if you don't answer. But don't hesitate, please. These are wonderful stories. And believe it or not, by the end of the seventh story, where you will be, you will not realize right now. You'll be a pakka technical analyst, a full technical analyst. All right. So coin scored, and then there is a pullback. The pullback is completing. Now, only story of support and resistance. Where it should go, sir? Only support and resistance. It should go here. Correct? The second resistance. Do you see the Fibonacci target revolving around the same price? Yes, sir. Where should the third target go? Somewhere here. That is the next resistance. Do you see the Fibonacci targets hovering around the same price? Yes, sir. Do you realize how beautifully all the four stories are matching or merging with each other? Candlestick patterns, trends, trend lines, support resistance, and now the Fibonacci ratios. Is that okay, sir? That is Fibonacci ratio implemented on charts for us. If you have any questions, please do let me know. I'm going to quickly do one more exercise for you on the downside. It will take only 2 minutes. And this one I'm going to do a bit faster because we have already done the first one. Oh, I've already done it, but that's the Elliott wave. I need to remove that. We will do the Elliott wave theory sometime later. This is the basic theory we are doing right now. We will do the Elliott wave theory sometime later. Okay, I'm clearing the Elliott waves plotting and I'm doing the ABCD for us. So here we have, let me remove everything. So here we have A, there is our B, there is our C point, and retracement is already done, so I'm just removing the 88%. So 4 lines, okay, sorry. 4 lines, you see the retracement went up to 786. Do you see a pattern, sir? Which is the pattern here? If you can identify, let me know by the time I'm doing the extension. The pattern here is an engulfing bearish. So what is the trade like? It is already very low right now. We had to trade a bit higher, but even if we trade right now, you can note down sell at 10850. Sell at 10850. I can type it if you want. Potential sell around 1.0850. The stop loss at 110, just above A, and the targets are flashing lower. And the first target is 104, 10560. Second target is 10460, and the third target is 10270, and even the fourth target is 101 something. That is the projector. I mean, 400 points, 800 points lower from here. But even if we are not carrying until 800 points, we can easily carry through the what 300 points lower from here. Actually, it is projected to go like this. Now you will say why I've drawn a line going up. Very simple, sir. Capital A, capital B, capital C, and that is capital D, correct? So how is the market going to go towards capital D? One straight line? No, it will it will go like this. Small a, small a, small b, small c, and then somewhere over here small d, and then again small a, small b, small c, and small d. So numerous small ABCDs will form, that will give us capital D. Is that clear, sir? I hope it is clear. If you do have any questions, kindly let me know. We are done with the story of the Fibonacci ratios, and I'm also going to paste these sessions on the links for the sessions, and that is my email address. Please do note down. If you do have anything to be asked or discussed at any time, please never hesitate to write to me. We always are eager to find out your feedbacks as well. So if you have any feedbacks, please let us know. If you want to have any questions, please let us know. Let me know if you are practicing charts, and if you want me to analyze whether we are doing on the right path or not, please send in your charts to this email address. It is harsh.jappi@gtcfx.com. And these four are the four webinars that we are doing every single week. It needs only one time registration, two English and two Hindi. You're all most welcome, and also help us spread the word. All right, then, once again, very humble thank you to all, and I will see you for English live sessions on Friday, 4 p.m. Dubai. And if you are joining for Hindi live sessions, it will be tomorrow, 4 p.m. Dubai. And for English live session, English theory, we'll be meeting next Tuesday this same time. All right. So once again, thank you everyone for joining, and take care and God bless. Thank you, Arnel. Okay, it is Arnel. I was calling you Amel. Okay, I have a far-sightedness. Sorry. Yeah, yeah. Thank you, sir. Very big name. Let me see if I can. Toluwalop. Is it Toluwalop? Oh, yes, it is Toluwalop. Thank you, Toluwalop. Thank you for your time. Thank you for your time. I really appreciate your presence here, and I hope that I pronounced it clearly. If not, kindly forgive me. Yes, yes, I tried. Tolu Walop. Thank you, Shuklaji. Thank you so much. I see Ravi over here. Thank you, Ravi. And then Joe. Thank you for your presence. Thank you, Ravi, again. Thank you, Joe. Thank you, Arun. Arun, I think you are for the first time, brother. Maybe you can save the link. I think you are registered for all the rest of the sessions. Please do join in. And if you want a recording, okay, I just forgot. Kindly excuse me. This is the recording for all the past sessions. If you are joining in for the first time, I think my friend Tolwalop has also joined for the first time. So please note down this YouTube playlist. All videos will be are already there. The ongoing ones will be uploaded there again. Our digital marketing experts keep on uploading them. You can find it there. Thank you, Mohammed ji. Yes, thank you very much. All right, sir. I think please do come again next Tuesday. We'll be starting another story, uh, risk management and time frames. Yeah, Toluwalab, I remember most of the names. I remember. I have that God gift. So I've seen you for the first time. Probably Arun as well and Joe as well. I think Joe is also joined for the first time. So please, Joe, Toluwalab, Arun, kindly note the YouTube link, watch the videos. If you have any questions, please don't hesitate. We're all brothers here. You can just shoot an email to me, and I will get back to you with an explanation. All right. I'll see you guys regularly from here on. I hope you enjoyed the session. All right, sir. I will end the session now. And once again, thank you for tuning in, and I will see you in the next session Tuesday, 4 p.m. Dubai time, and other sessions as pasted here. We are doing Tuesday, Wednesday, Thursday, and Friday, 4 p.m. Dubai time. You're most welcome. Every session is a learning for all of us, and we'll enjoy. Thank you so much.